Welcome to Cryptocurrencies, the Future of Digital Money show at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today's guest is very popular and immensely knowledgeable in the world of cryptocurrencies. We are excited to welcome Vortex, the host of the Bitcoin News Show on the World Crypto Network. Vortex, welcome to the show. How are you today?
Oh, very well, Michelle. Thank you so much for having me in this crazy, exciting world of cryptocurrencies.
Vortex, I want to start right off by reading some of the numbers to you that we will display on the screen for our audience at the same time. It illustrates the power of the network effect. What we'll be looking at is the time range that it took Bitcoin to climb every $1,000 up to $9,000. And here it is. 0 to 1,000 took 1,789 days. 1,000 to 2,000 took 1,271 days. 2,000 to 3,000 took 23 days. 3,000 to 4,000 took 62 days. 4,000 to 5,000 took 61 days. 5,000 to 6,000, 8 days. 6,000 to 7,000, 13 days. 7,000 to 8,000, 14 days. And do you know, it took 9 days for Bitcoin to climb from $8,000 to $9,000. Is this normal and sustainable, or should we expect a large sell-off at some point in time?
Yeah, it's very, this is a really common question that people ask enthusiasts of Bitcoin and cryptocurrencies because, it's very hard for the human mind to wrap their head around exponential growth. You see, humans are pretty standard at being very linear, right? We understand that tomorrow comes after today, and that when you take one step, you've taken one step. Where, for example, if you were to increase your steps doubling every time, in 30 steps, you'll be at 1 billion. And so people tend to really not understand this, but we've as a society have researched this stuff for many years, and what we saw it play out in is many things, many global changing technologies, such as the internet, such as PCs, and then mobile. What happens is something called Metcalfe's law, and what we experience are these network effects. And Bitcoin has many network effects that are going for it. What it does is it climbs exponentially. So you start out with something that nobody thinks is useful, right? And for example, let's take domain name prices. In the early 90s, you could buy like truck.com for like $20, no problem. And nobody really cared because nobody was on the internet. And then what happened, a funny thing is the entire world learned about email in 1999 to 2000. And all of a sudden, you looked around and everybody had an email address, and domains were going for millions and millions of dollars. And remember, domains aren't exactly as very scarce. You can kind of come up with anything you can think of, right, in general. However, Bitcoin is very, very, very scarce. There is only ever going to be 21 million coins. And when you look at this and you compare Bitcoin to traditional markets, you look at these traditional markets such as gold, derivatives, and bonds, they're all trillions, and the trillions measured in the trillions of dollars. And so when you look at Bitcoin and you see this little scrap of a thing that started out this year at about $1 to $5 billion market cap, you're like, well, that's just a little penny stock. That's not very interesting, of course. But you see, it's not a stock. It is a network, and what it's experiencing is network effects. And these network effects drive these global changing technologies dating all the way back to the railroads and then to oil. Well, before that, to oil, then to railroads, and into cars, and into electricity. These global changing technologies grow exponentially because anytime somebody joins to the network, that overall adds value for everybody in the network. And so this just compounds on itself over and over and over again. And what you see is what we call some crazy FOMO buying. People are becoming very scared of missing out on this global changing technologies because there was a lot of people that missed out on the web and on the internet in the early days. And so there's a lot of people that said, you know what, I missed out on the internet, but I am not going to miss out on the internet of money.
And the FOMO, fear of missing out. You hear so many people right now say, oh, it's $9,000, $10,000, I missed out. But that's probably not the case. It's probably going to continue to rise, right? Absolutely.
And remember, as a long-time Bitcoiner, I've been hearing this, since it was $100. Oh, it's too late. And then it went $500. Oh, it's too late. 1,000, it's too late. And 2,000 and 3,000 and onward all the way up. And remember, if Bitcoin is to succeed, if it really is to fulfill its destiny of what the code is telling it to be, which is this global reserve currency, this global reserve store of value that really will encompass and eat all of these other markets, then by definition, Bitcoin must be millions of dollars per coin in order to facilitate the amount of liquidity and value that we have in other markets in this world.
That's incredible.
And it really is. When you start looking at all of these horrible choices, because if you're a wealthy person or even a regular person, you only have a few choices where you can store your wealth, right? Where you can store your money. And for example, for the middle class, really, they don't have anything except for the dollar. That's really their only choice. They don't have enough money to, for example, purchase into stocks or anything like that. But for the wealthy, they have a few options such as stocks, right? The S&P 500, gold, bonds. But you can count them on one hand. The amount of options that you have to store your wealth. And on that hand, you can, one by one, start counting off the things that are actually scarce, the things that are actually real. And what you're left with is a 100% kind of empty paper market propped up on nothing. And that's really scares a lot of people in the world. And really, it has led to what we have today, which is this global fiat printing scheme where every single country just continues to print themselves out of the bubble, the previous bubble. And that will only create a new bubble. And when it comes crashing, it will come crashing. People will start to look for places to put their wealth in. And what they're going to find is that Bitcoin is the absolute best place currently to store your wealth.
So you are in the school of thought that it will go up to $1 million per Bitcoin or even higher.
So you kind of have to think about it like this. Once we start getting up into those numbers, you have to start to ask, what is value? Okay, so if one Bitcoin is $1 million, then what can a dollar buy? At that point, right? And so if you flip the chart of Bitcoin upside down, that's what's happening to the dollar. When you flip the Bitcoin chart upside down, that's what you're looking at as the US dollar. And as that continues to decline, at one point we will no longer be measuring Bitcoin in dollars because we'll have to measure it in something that we can actually buy something with, right? So if a Happy Meal is $10,000, then it's not a really good way to measure the price of Bitcoin.
Most people in America and the United States don't see that as even fathomable, and they don't really look outside the country, what's happening in places like, of course, Venezuela, that not so long ago was a thriving economy, and now to purchase a Happy Meal, it takes you $10,000.
Yeah, and when Bitcoin hit 10,000 US dollars, that pretty much means 1 billion bolivar, I believe, in Venezuela. And so it's a huge global milestone to hit $10,000 on the level of when it actually reached parity with the US dollar back in 2011, when it actually hit $1. I mean, that was an absolutely amazing accomplishment, and everybody was astonished because this little scrap global, decentralized little application that was created by some anonymous person has the amount of purchasing power that the number one country on the planet did, and in comparison. And so that this right here, in my opinion, hitting 10,000 is on the level of once we hit $1, once we hit parity. This is the level of excitement. Everything in between, of course, was just nothing but growth and hard work. And to be honest, it flew by pretty fast. But really, this is a time to reflect. $10,000 price is a time to reflect on why Bitcoin is $10,000. What made it $10,000? And these questions are what I hope people start asking.
And what's your answer to that?
So there's a number of answers, but the questions are more important because the answers are what come after the realization. And so you have to get to that realization. So you have to ask, what happened in the 70s where we had. Well, you have to go back even further to monetary policy, right? Global monetary policy shifts every 50 years or so and has for many centuries. And so you have to figure out, okay, what caused that? First we had the oil, right? And which caused a huge shift. And then the Industrial Revolution caused another shift. And Bitcoin really is another shift on parallel with oil and electricity and these things that completely changed the world. So we will have another wealth transfer, just like we did with oil. Just like we did with the Industrial Revolution, this is the next wealth transfer from the old to the new. And when you look at it like this, and you look at it over the long term, you see how things play out. And so then, you can really start to get technical. But at the end of the day, to average users and to average people, the questions that I really hope that they start asking, for example, is what is the dollar worth, and why is the dollar worth that, and how did we come to this realization that that pricing things around the world in this one currency is okay. And so that's the questions. And you have to ask the right questions before you can get to the answers. And to me, the questions are just as important as the answers, because after the answer, that's it. You are awake. You understand the global financial system and how we got here today. And really, Bitcoin has had a huge incentive for people to research these questions, because again, once you start looking at Bitcoin and saying, how did that get to $10,000? Now you're on the right path to figure out what could happen in the future.
Right. It's a scary time because of fiat and everything that's happened and culminating, but it's an exciting time with these cryptocurrencies and the industry of this.
It really is, and I like to call it, I kind of coined the phrase, a global financial renaissance, is what I believe that we are experiencing right now. This absolutely is a new renaissance in the financial markets. People all over the world are experimenting with this technology, and this technology allows them to do real-time things, real-time payment processing, real-time economics. You see, I like to think that crypto economists are the only true economists, really, because crypto economists are the only type of economists that can actually in real time run their own economic theories. They can actually test it on these cryptocurrencies in real world scenarios with real money, and they can can come up with what I think we're going to understand more and more as a more sound monetary policy, because the policies that we have right now are based on this Keynesian type of understanding of money, and it's what's pushed with every single professor in every single major college in the U.S. Just to be honest and frank, has it completely backwards. And it's going to be a real hard sell and a real tough wake-up call and a real large pill to swallow for these types of people that think that inflation is good, that think that we need to continue to increase the money supply, and thinking that that's a good thing. For people who believe in trickle down effects, right, quote unquote trickle down effects, this is going to be a real big wake up call. This decentralized, deflationary monetary policy.
Vortex, due to the approaching tax season, is it safe to assume that most investors that are holding Bitcoin will not sell in order to defer taxes instead of realizing their gains? What do you think?
So it's, of course, you have to take it by an individual basis, a one-on-one basis. There's many rich Wall Street people who are getting into this and absolutely doing their due diligence with every single ounce on the books and every single ounce to the right taxes and things like that. But the vast majority of people who have gotten into this cryptocurrency, who have not gotten into it to get rich quick per se, who have gotten into it for ideological beliefs, because they truly believe that it is sound money, they truly believe in mathematical scarcity, then you don't really care about what the price of it is within the next days, within the next month, within the next year. You care about long term. You care about 5 years out. You care about 10 years out. You care about your children. What will it be like when your children are adults? And so with that type of thinking, you can understand that this is going to play out over decades. And slowly but surely, like software has eaten the world, so too will Bitcoin eat the financial system.
Now, November has been such a crazy month, not just for Bitcoin, but for many of the top 20 altcoins. Tom Beck, the founder of Portfolio Wealth Global, invested in Litecoin, for example, at $5 and Dash at $16. And he's laid out the case, and in 2018, there will be new cryptocurrencies that will emerge and will solve some of today's challenges and will hit the ground running, going from 0 to 1 billion in a week or two. Do you have any horses in this race that you are betting on? The only currency I've ever really not advised per se, but suggested maybe that anybody ever purchase is Bitcoin. Bitcoin is the only, in my opinion, the only blockchain, the only actual blockchain that's in production. Because you see, there's a million of these coins, right? A bunch of these coins, but the problem is that they're all the liquidity is purely based on speculation. So, for example, tomorrow I could go and create an ICO token that I could say has a billion, let's call it a trillion tokens, and then it gets to one on the market value gets to 1 penny. Well, all of a sudden I've made millions and millions and millions and millions of dollars, right? All of a sudden the currency is worth millions and millions of dollars. But is it really? And so that's what you have to think, because in the long term, as Bitcoin continues to eat financial markets, as it continues to grow, as it continues to gain in utility, the rest of these currencies, people are going to start scratching their head asking, why do I need these? What do these actually do that are different? And is it better
for us all to speak the same language, for us all to use the same protocol, similarly how everybody uses the TCP/IP protocol, so that we can all globally communicate on this thing we call the internet? Is it going to be better for them to communicate on the Bitcoin protocol? And in the future, I believe that that answer will be absolutely yes.
Now, Vortex, do you think that everyday investors have the talent and the capability to know which ICO will be successful?
No, at this point, it's pretty much a guess. There's of course a number of properties that you can take into account, such as the dev team, who's advising the token, and what of course the actual use case of the token is. But at this point in time, it's really reminding me of the .com bubble, because you could really just with a website pretty much secure millions of dollars in VC funding, similarly to how right now you could secure possibly millions of dollars of ICO funds with just a white paper. And so this type of irrational exuberance is going to die down at one point. There will be a correction, but whether that correction is from 100 billion down to 50 billion market cap, or of the entire system, or if that's a trillion down to 500 billion, whatever the correction is, there will continue to be corrections, because as we've gone up, you can kind of see we have this sidestep pattern, right? This kind of stair step pattern, and what happens is it goes up and then it corrects down 20-30%. But again, that's because of the liquidity, right? It's a small little ship compared to the Titanic of the US dollar and other traditional markets. So we're going to get sloshed around a lot. However, as that continues to grow and liquidity comes into the market, the swings will be much smaller eventually. And as the amount of Bitcoin taper off and the price of Bitcoin rises, once we get into the multi-millions of dollars per Bitcoin, you just won't be able to have these huge 30% swings in an hour and things like that. The liquidity just won't be there. So it'll just be too overwhelming. And that's something that we're all looking forward to, because it is early days right now. I try to tell people on my podcast all the time that this is very, very early days. We are basically around the internet circa 1995, maybe. And there's so much more to come, that to try to make kind of some of these price predictions and some of these predictions of use case and utility is just kind of too crazy right now. For example, it's like trying to predict Facebook and YouTube in 1995. It's a little bit difficult. However, there were some economists in the late 90s and earlier that were predicting a digital money could perhaps arise, and that's what we've seen with Bitcoin.
Now, Vortex, you've become incredibly knowledgeable and entrenched within the meteoric rise of this phenomenon. Could you please share with our audience a little bit about your own background, when and how you first became acquainted with cryptocurrencies?
Sure, yeah, it's actually kind of a crazy story. It's really strange because I am like you said, I do have a show called the Bitcoin News Show on the World Crypto Network YouTube channel. And it's really interesting because at the beginning of this year, there wasn't really a whole lot of cryptocurrency and Bitcoin podcasts. And the ones that were there, including, the Twitter accounts and the YouTube shows and all that kind of stuff, all the social media was very low, not compared to what it was today. So I was really happy when I got, for example, 500 views on my video at the beginning of this year. I was like, wow, 500 views on a show. And with the rise of the Bitcoin price and the rise of the market cap of these cryptocurrencies, it has brought so many more millions of people into the space. It's really going crazy. So now my shows are getting over 10,000 views. And it's just been an absolutely amazing ride. To ride this ride of cryptocurrencies, because again, it's there's so many things out there that are niche communities, and that's great. There's a bunch of niche communities out there, but to have a niche community become a mainstream community is always a huge deal, right? It's always a huge ride and very, very crazy stuff. So it's been excellent and amazing to watch all of these podcasters. Both their Twitter account followers rise, their YouTube account subscribers rise, just everybody, one after another. We're all riding this wave of this cryptocurrency phenomenon. So it's really amazing to see, and I'm really proud and really happy for all these people. But for myself, how I really got into cryptocurrencies and Bitcoin was kind of the standard way. I understood that where the trajectory that we were going as a planet, if we were to continue with this type of global monetary policy that we had, which was basically an entire world of finance built on nothing. And so I kind of saw where we were going. Remember with the ban on cash across the world and things like that, it was clear that we were going into a totalitarian type of type of society, a police state type of world. And so I really didn't see a whole lot of options out of that. And so I understood the monetary policy, I understood the history, I understood what was going on. And then when Bitcoin came around, in 2012, when I first saw it, I was just blown away. I mean, there's not one single person in Bitcoin that will tell you that the first time they saw it, they knew it and understood it and started buying, right? Absolutely not. Not one single person in the whole space do I know that upon first viewing of Bitcoin thought, this is going to change the world.
Right. So, nobody even understood what it was or how it
absolutely
worked.
Not. And Andreas Antonopoulos, even one of the prominent community members of the space, will tell you the same thing. It's like, oh, it's internet money. It's World of Warcraft gold. What's so amazing about this? But as the price continued to rise, as it does, people continue to come back and they say, well, why is this thing not going away? What's making this price rise? Why are people putting more and more money into this thing called Bitcoin? And when you start doing the research, then you start diving down the rabbit hole. And so then you start realizing that, oh, there's this fixed supply. Oh, there's this global Nakamoto consensus where everybody is incentivized through game theory to do right by the network, to continue to grow this network, and that bad actors will be punished. And you're like, wow, what? This is absolutely amazing. And once you extrapolate that, then you get to the point to where you realize, wow, what we have here is truly math-based security, a form scarcity, math-based scarcity. And what we have here is something that we've never had before. There has been, the closest thing we've had to this is gold. And that was the closest type of scarcity that we could realize in this world. But now that we actually have finite, truly mathematical, provable, mathematical-based scarcity, we can build amazing civilizations. We can build amazing companies. We can build amazing things. We can build on top of this, build economies that are actually based in reality, economies that can't be manipulated, economies that can't have their monetary policy be to print their currency into oblivion, right? And so with this comes, when you extrapolate further, you realize that this will usher in an entirely new global, a golden age where trade and money and currency is truly set free and truly available to everybody on the planet, not just the 1% of the world.
Vortex, okay, I'm going to name 7 different coins to you, and I'd like you to provide a quick overview of each one with the latest updates. So,
okay. Let's just
this is a challenge.
Yes, exactly. Let's preface this with the fact that I do spend all of my time in Bitcoin and follow Bitcoin because remember, I follow Bitcoin basically full time here. This is what I do. I listen. I read all the mailing lists. I listen to a lot of podcasts. I speak with people. I speak with investors, hedge fund managers, programmers, all the time. And there's just an insane amount of amazing things that are currently coming down the pipe for 2018, and I'm just super excited about it. But I will definitely do my best to try to comment on these additional tokens.
Oh, wow. Then we will start with Bitcoin. What's coming down the pike in 2018?
Okay. So you may or may have not been aware that there has been this huge scaling debate in Bitcoin for the past couple of years. And there's been people on both sides, people who want to see this more as a currency, and there's people who want to see this more as a digital gold. But in the end, Bitcoin will become both if given a long enough time scale. And so because what's important is very important is to build the secure, decentralized, censorship-resistant base layer first, and then you can build whatever you want on top of it. And whatever you want on top of it is going to be amazing things that I'll tell you about now. So, for example, is the Lightning Network. This is something that will help Bitcoin scale, and that is currently being developed on by a number of people around the world that are working on this. And this is a technology that could bring hundreds and hundreds of thousands of transactions per second to the Bitcoin network that's currently capped at about between 3 and 7 at the base layer. So this Lightning Network is what we call a layer 2 technology that sits on top of Bitcoin. So we have this beautiful, secure, censorship-resistant layer underneath that no government, no corporation, and no company can ever mess with. And then on top of that, we have this amazing technology that can go through hundreds and hundreds of thousands of transactions per second. Because remember, with Bitcoin, it's not about competing with Visa, okay? It's not about the amount of throughput of transactions. It's about the ability to make the transactions they say you can't make. And so this is what Bitcoin provides at the base layer. And as long as that base layer stays intact, most of that censorship resistance, decentralization, and security will remain in the layers above. Now, with each layer above it, of course, it gets reduced. But Lightning is something that's super, super exciting for longtime Bitcoiners who really want to see this technology be used by the whole world and not just, of course, a niche group of geeks. We really want to see the whole world using this. And it took the internet about 20 years or so to go from having to send an email address to send an email. You have to download a Unix command prompt and program it yourself, almost compile it, and then get on the network to be able to send an email that would take 3 days to about 5 or 10 people. From that all the way to what we have now, where your grandmother can just swipe on an iPad. Mm-hmm. And so that's what we're trying to go with Bitcoin, to have this niche thing where right now you have to download a wallet and this external software and learn all this stuff. Eventually, this will all be baked and built into all of your devices, all of your daily lives, and it will be seamless to the point to where you won't even notice it. Similar to how the internet has become a utility. It's like water or electricity. You need it to survive. This is how Bitcoin will become. Now, that's just one thing, the Lightning Network, and that's what that's going to help. But another thing is really cool is we continue to optimize. You see, it's not just about increasing the throughput, but about optimizing what goes on that network, the actual packets that go on that network. And so something called Schnorr signatures is also on the way, which will provide all sorts of additional features that will help privacy and optimization. So that's some big, huge things. And then on top of that, we have things like confidential transactions that will truly allow you to transact anonymously on the Bitcoin network. Because as it is right now, there is some level of traceability. If someone, for example, got a hold of your wallet address, they can see where you've spent and things like that. So it's not quite as fungible as we'd like it. But with confidential transactions and even a couple things after that, such as Mimblewimble, these privacy-focused features will come to Bitcoin and eventually will make Bitcoin the fastest blockchain out there, the most secure blockchain out there, which it already is the most secure, but then the most privacy-focused as well. And it's really important that this be a dial of privacy so that you can go from your standard stuff where maybe your family needs or your bank or whoever you're transacting with needs to know your actual address, all the way down to globally transacting with people where you don't even need to know who they are or even if they're human. Because that's a big part of what Bitcoin is going to bring is machine transactions, transactions created by the Internet of Things, artificial intelligence, these types of things. And that's where things really start to get interesting, is when the machines are making the transactions.
Wow, that's a really good point, because our world's changing so fast that AI coming online is going to be a real interesting phenomenon in itself.
Absolutely. The software, remember, the software doesn't have a name. The software doesn't have a social security number, yet the software needs to access money, needs to access funds. And so Bitcoin provides that ability for software code to directly interact with funds, with money, with monetary policies. And it's going to get real crazy in the future when we have these scenarios that get enabled. I'll just give you just an kind of outlandish crazy scenario. For example, let's say you're driving down the road, automatically in your car that's automatically driving you for you. And you're in a hurry, so you tell it you're in a bit of a hurry. And so what happens is as your car is driving in the fast lane, it can actually automatically and autonomously send microtransactions to the vehicle next to you to pay your way to get a little bit ahead. So you could be like, I'm in a hurry. I'm going to pay a little bit extra money to go faster, and then the cars that are in front of you will gladly take some money to go a little bit slower.
Oh, wow. That's mind-blowing.
That's just one example. And then to just give you one more, all of the value, all the processing power that is locked up on your cell phone is just enormous. What we're walking around with is nothing less than supercomputers in our pockets. And the problem with that is that nobody can access that. It's only a one-to-one. What if the whole world could securely have access to the whole world's actual bandwidth and processing power? So what that means is, if you, for example, decide to say, I have a lot of hard drive space. I don't need 100 gigs. I only need like 10 gigs. Well, you could actually download software on your computer that would allow the rest of the space on your hard drive to be leased out to other people around the world per second. For example, somebody is using somebody need a little bit more space, so they'll just pay you to give a little bit more space that you don't need. And when you extrapolate this on a global scale, when you have millions and millions of people doing this, Now you're taking advantage of so much value that was locked up and siloed before, that it would bring bandwidth costs and costs of computing down many orders of magnitudes, when you can actually take advantage of all the siloed processing power and siloed space out there. You wouldn't even need things like Amazon Web Services. You could just directly connect via mesh networks in a decentralized fashion to get what you need, all automatically, all done through these blockchain type technologies, mainly Bitcoin.
It opens up just an incredible world of innovation and opportunity, and just your mind can just go crazy with what the possibilities are. It
really can, and I've been studying this since 2012 or so, and every day, almost every day, or for sure every time I read a new research paper, my mind continues to expand. I can continue to go further and further down the rabbit hole. There's just literally limitless. There's no end to where we can take this. There's no end to what we as a civilization can do with this type of technology. It really is limitless.
Okay, next altcoin, Ethereum.
Okay, so yeah, there's important to note that there is a number of large, what we call there's a few different names for them, but what I call something like top tier altcoins. These are the altcoins that have been around for a while, have a pretty good proven development team, and appear to want to create true innovation and not just, for example, raise money or raise capital for some type of fintech company. Because remember, fintech these days is not fintech, right? It's just FinUX. Right, it's just
yeah.
thin user interfaces over the top of traditional financial systems. Like that's what PayPal is, and of course that's what Venmo is, and all these other ones. They're just FinUX. But real fintech like Bitcoin is going to take this to another level. Now, Ethereum. Again, I would consider Ethereum more fintech, right, than FinUX. So there is some interesting things that Ethereum is doing right now, but mainly their main use case scenario that kind of brought them from the obscurity to the mainstream is the ability to facilitate an ICO. But the thing is that you can put an ICO on a number of blockchains. It doesn't actually have to be Ethereum. So they do have the first mover advantage there for things like smart contract technology and ICOs. But when you look at its underlying fundamentals, when you look at the fundamentals of the programming code, and you look at the possibilities of what could go wrong, when you see the huge attack surface of this thing that has this Turing complete programming language, you come to realize that, wow, okay, one wrong variable declared as public instead of private could cost people, tens of millions of people, hundreds of millions of dollars. And it gets real hairy. And there's a reason why something like Bitcoin, for example, has a very simple, very restrictive scripting language, because we're talking about other people's money here. And so Bitcoin takes the much more conservative approach. Ethereum has been taking the move fast and break things approach. And both approaches are great. We're going to find out, we're going to meet in the middle one day and find out what is the best. But for the most part, I'm not seeing as much innovation in Ethereum as I am in Bitcoin. However, it's a big world, and there's a lot of time left to go. So there could be some more amazing things coming down the line for Ethereum.
Okay, let's go into Ripple. What do you think of Ripple?
Sure, and one last comment on Ethereum.
Sure,
the big thing is scaling, because remember, these blockchain technologies inherently, by default, by design, are super slow, super inefficient. And there's a reason for that. The reason is to keep it decentralized. The reason is to keep it censorship resistant. If we wanted a super fast access to a database, well, we would just use Amazon Web Services, or a traditional SQL database. But the thing to keep in mind is that the innovation here of Bitcoin is the blockchain, is the decentralization, censorship resistant, global blockchain that is permissionless and accessible to all. That's the innovation. Now, Ethereum is a public blockchain. However, the scaling challenges that Ethereum faces is far worse, far larger, and many orders of magnitude more difficult than Bitcoin. So they have a lot of work to do there. So I'm interested to see what they can do there.
Let's go to Ripple. Yes. What do you think?
So Ripple is kind of a couple of these. I guess I'd put Ripple in the bank chain. This is more of the fintech, the FinUX category than the fintech category to me. So this is more of the banks trying to find out ways that they can do simple things like lower their fees. lower their fees between interbank transfers, things like that. That's what Ripple is trying to champion and things like that. Hey, they go to the bank and say, look, guys, we can do a couple of these things more efficiently, and that's great for the banks, but that's not what interests me. I'm not here to give the banks, I'm not here to help the banks shave a few percentage points off their bottom line, right? I'm here to change money. I'm here to bring the money back to the people. I am here to steal fire from the gods. I'm not here to, I'm not here to help a bank CEO shave a few percentage points off of their bottom line, maybe help their interbanking relationships be a little bit better, help facilitate some transactions better and things like that, and maybe create crazy amounts of new derivatives off of, who knows. Right. But at the end of the day, Ripple to me is absolutely not interesting. To me, Ripple would have been better off just used as a centralized database instead of actually using something like Ripple where they try to decentralize it. They're adding complexity when the whole point is to remove trust. And Ripple requires a whole lot of trust.
I love that, steal fire from the gods. That's really what's happening here,
Absolutely. Remember, money creation has always been in the power of kings, of governments, of banks. It has never been in the power of the people. And so this is for the first time the ability to bring power to the people really is like stealing fire from the gods.
Okay, Vortex. Next one is Dash.
Sure. So and a couple of these currencies are pretty interesting, but Dash is not quite as centralized as Ripple or anything, but it absolutely is a little bit more centralized than Bitcoin. Really, I'm going to say that Bitcoin is, in my opinion, the only actual decentralized blockchain in production. However, things like Ethereum are doing, interesting things, and things like Dash now are doing interesting things. They're more focused on money itself. They're more focused on creating digital cash, creating really fast digital cash. Remember, their biggest claim to fame, Dash and Ethereum and these other, is that they claim to do something better than Bitcoin. Right? That's their claim to fame. It's like, hey, guys, don't look at Bitcoin over here. Don't look at Bitcoin over there. Just look at us, what we're doing over here. And by the way, like, our only claim to fame is something that's slightly better than that thing over there, but don't look over there. And so it doesn't quite compute when you start looking at it all, and you realize that, oh wow, okay, so these people are just capitalizing on something that Bitcoin can't do quite as well right now. But remember, like the internet, it will evolve. So we started out the internet with dial-up modems, and we had very slow connections, no images, just text. And eventually we went to images, and then video, and then 1080p video, and then 4K video. So like that with Bitcoin, we will evolve with things like Lightning Network to where we started out with very slow amounts of transactions, but it will be increased because the incentive is there. That's what's important. The incentive is there. I'm not sure that the incentive is there with a lot of these other tokens. To me, the only incentive I see for things like Ethereum and Dash is a get rich quick. I don't see them doing anything particularly innovative.
Let's go to Cardano, which just jumped 97%. It's just going crazy. What do you think of that one?
To be honest, I actually have no idea. Remember, this is kind of crazy. When you look at the top 10 cryptocurrencies, they change all the time, right? Every month, there's some new flavor of the month that's up there. And so to me, Cardano, without even looking at it, it seems to be just another flavor of the month that's going up there. Because, I haven't heard a great deal about it. I can't, of course, fully comment on it, but from looking at history, right, from seeing history repeat itself, I can probably guess that this is just another token that's the flavor of the month that people will pump, and then they'll dump, because they'll dump, and you know what they're going to dump it for? They're going to dump it for the same thing that Ethereum people dump their Ethereum for the same thing that Dash people dump their Dash for. They're going to dump it for Bitcoin.
Right, exactly.
Yep.
Okay, let's go in a little bit of a different direction. What about Steam?
Yeah, Steam. So this is really, I absolutely champion all of this amazing innovation from people out there that are creating these things like Ethereum and Dash and even Steam. It's very interesting. My main problem is with the economic fundamentals of these types of things. What are the fundamentals? What is the sustainability? And a lot of these things, I just don't see very much sustainability in the long term. And Steemit is something where it's like a very early MySpace, if you want to compare it to the internet. It's like an early MySpace. What came out of MySpace? Well, Facebook, pretty much, right? The world's address book. So something very large came out of something very simple that it was MySpace. And so Steemit I see as that first stepping block, like a MySpace, where though it might be slightly interesting right now, the implications of what this means is far greater than the thing itself.
What about Golem?
Yeah, I'm actually not 100. There's so many of these tokens, Golem, I guess I don't have a whole lot of commentary on that. There's a bunch of these platforms like Ethereum, Golem, EOS, Ethereum. There's a bunch of these platforms that try to facilitate applications on top, such as ICOs. And Golem is another one of those platforms. And so there's a number of these platforms. There's Stratus. There's just a half a dozen plus, or maybe even a dozen now. It's hard to keep up, of these platforms that are all trying to capitalize on this idea of building things on top. But again, right, why would one build something on top of something unless there was incentive, unless there was a value, right? So if you start your own internet, what is my incentive to go on your internet instead of the main internet? And so these network effects that Bitcoin has is just going to continue to dwarf these other tokens where, sure, in the beginning, they might do some interesting things and they might get some market cap behind them. But at the end of the day, you have to ask yourself, what's my incentive for buying this? Is it just to get rich quick? Is it just to turn over? Which is the answer to most of these tokens.
I want to add one more. I want to add Litecoin just to see your thought because it's so similar to Bitcoin.
Absolutely, and I'm glad you brought that up because I do. Litecoin is like the only other token that I would say that could actually compete with Bitcoin, and not compete directly, but just in the long term as a currency. Now, what I believe will end up happening anyway, though, in the future is that Litecoin and Bitcoin will merge somehow, whether that's merge mining or whether that's merging ideologies or merging dev teams, whatever that is, whatever that looks like. I do believe that together they will make something more powerful than they would by themselves. But Litecoin is the actual closest cryptocurrency and token that is closest to Bitcoin, because remember what they did is they forked Bitcoin, changed a few parameters, and then launched that as Litecoin. So Litecoin essentially is Bitcoin with a few different parameters tweaked. Mm-hmm. And so it does still have those things like censorship resistance, fixed store of value, and things like that. And it really has a great community around it. And they have great goals. Their goal is not to get rich quick. Their goal is not to start new ICOs over the top of it. Their goal is not to facilitate and ask banks how they can help them with it. Their goal is not to create new interbank lending platforms that can shave off the bottom line a few percentage points. Their goal is innovation. Their goal is to bring Litecoin and Bitcoin and cryptocurrencies to the rest of the world, to keep this idea of a decentralized, censorship-resistant currency alive. And that is really important. And so I do believe that Litecoin is an important coin. I of course, can't recommend anybody invest in anything more than you're going to lose. But at the end of the day, at this point, it's almost like 90% Bitcoin, you want to keep maybe 5 or 10% in Litecoin.
The last question I really want to go into is, what is your opinion on the wealth gap and the opportunity gap between upper class America and the rest of the population? It's now a fact that the top 0.1%, or one person out of every 1,000, owns more assets and monetary wealth than 900 others combined. What are your thoughts on the effects that this is having on our country?
Sure. So, you have to go back and, ask yourself why this is, right? Why did this happen? And when you start to ask these questions, it always comes back down to economics. It always comes back down to money. And, you can trace all of these things that was happening. It wasn't, for example, it wasn't an evil plot from the beginning or anything like that, conspiracies theory-wise. But there was several events that occurred that led us to this point. Now, I believe that we are absolutely at the peak, or getting close to the peak, of this type of wealth gap. I don't believe that this is sustainable. I don't believe that this will last very long, simply because we have cryptocurrencies now in the world. Before this, like I mentioned earlier in the podcast in the beginning, we were absolutely on a path of pretty much destruction. We were on the path of widening this wealth gap even bigger and even more pronounced across the world. However, because of cryptocurrencies now, we are going to experience another wealth transfer. Like I said, and again, like I stated earlier in the podcast, the wealth transfer not seen since the Industrial Revolution, a wealth transfer not seen since oil was invented and created and found and used. So it's temporary, in my opinion. It wouldn't have been temporary without cryptocurrencies, but now with cryptocurrencies, it's absolutely only a matter of time before the world balances out this wealth gap. Because when the wealth transfers, I assure you, it will transfer to the internet. It will transfer to the citizens of the internet, to the people who understand that the internet is what's communication, keeping the entire world on one monetary policy is what's going to be important. A monetary policy that doesn't get completely destroyed, that doesn't get completely changed every 50 years for the worse. And so this is what we're going to see. And I really hope that at one point people realize that this is going to be a wealth transfer, and they really start taking that seriously. Because right now, there are a lot of people that still don't take Bitcoin seriously, even despite the $10,000 rise. But make no mistake, if you bet against Bitcoin, if you bet against these cryptocurrencies, if you bet against this global financial renaissance, you will have your face ripped off. Like it's going to completely destroy all your wealth if you try to hold out. It will eat your wealth for breakfast, just like the internet has and software has eaten the world. And so I just highly recommend that people go and educate themselves about this technologies, about these things, and buy a little bit. Just buy a little bit so you can see and play with it and see what it's like. It's the equivalent of telling somebody to get an email address in the mid 90s, because one day everybody will have one.
Something I want to add, the founder of Portfolio Wealth Global, Tom Beck, actually sees this period of time as being one of the most dangerous in history for our country, because people are finding so many things to divide themselves rather than tying themselves together, including cryptocurrencies. What is your perspective on this?
Well, remember, the world has been getting better for a century. Everything has been getting better. The amount of poor, right? Extreme poverty has gone down. The amount of murders has gone down. The amount of clean water, drinking water, has gone up. The amount of so many things, are continuing to rise. However, what he kind of sees, I believe, is the fear that these media companies, these banks, these governments try to push on people. Fear of separation and fear of what's to come, when in reality, we've been making this planet better, exceedingly better, every day for many centuries. And especially in particular, the last 100 years, we have absolutely made it easier to survive across the planet. Now, when you're talking about, things, people getting scared, like, oh no, we're going to further divide. Trump, right? All of these things. My only advice would be is to look at the data. Go out there, educate yourself, and look at the data. Look at the censuses. Look at the statistics. Don't pay attention to what some guy in a suit is telling you. If you want to know the truth of the world, do not read Time magazine. Do not read Newsweek. You're going to get that type of information is specifically designed for a specific class of people who need to be told that everything is okay. People who need to be told that this is how it's going to be. They have pretty pictures in there. They have all of these things. This is what you have to realize is happening. When you look at the real statistics, when you look at what's actually happening, is the world is getting immensely better. People are waking up. We are becoming more and more connected than ever before. And that is absolutely an amazing thing and an unprecedented thing. And as the world continues to go along, we will become more connected. We will become more wealthy. We will have more technology. Will make it easier and easier to live. And eventually, look, when you look down the line, you can see crazy things like food processing machines, which is basically like 3D printing your food. You can see these desalination machines that can clean any water, no problem, perfectly in real time. You can see these machines that will create electricity for you so you don't have to rely on the grid anymore. There is just one thing after another that will come. And remember, all of this will be facilitated by the fact that we have the second missing piece of the puzzle to bring the world together. The first piece was information. We have to be connected. You have to have the truth. You have to be aware of what is actually really going on in the world before you can make a decision to help it, before you can find your path and find some kind of solution. You have to know what the real problem is. And the second piece of this huge puzzle that's coming is finally that's here is Bitcoin, is cryptocurrencies. This is the second half of the piece. This is the second piece of this puzzle. There's two main pieces. And the second piece is money. Now that we have the second piece of money, now that we have a money that a government can't control, that a corporation can't freeze, that somebody can't steal from you just from thousands of miles away. Now that we have this ability to fund our own projects, to fund what things that we think are good, not what a committee thinks is good, to not ask to no longer have to ask for permission to create something that we believe will better humanity as a whole, it's just amazing. With this type of unprecedented world that we live in now, where we have access to all of the world's information and now access to money, globally, there is no other outcome except for a new golden age. They can try to fight. They'll fight this, and just like the telephone companies fought the internet, but eventually they will become ISPs, and the banks will become Bitcoin companies, and they will become Bitcoin fintech companies. And this is just the way of the world. And all you have to do is, again, look at the stats. Don't read what Newsweek is telling you.
Beautiful, beautiful. Vortex, this has been an amazing interview. Please tell our audience how they can follow you and specifically where they can find your show to stay up to date on everything that's happening.
Sure, absolutely. No, this was definitely great. Thanks so much, Michelle. All my work really is at the World Crypto Network. And so you can find all the shows that I help create and that I create myself, and on the worldcryptonetwork.com, or you can just Google the World Crypto Network. You'll find our website and you'll find our YouTube channel. And that is where basically I put all my content. And then my Twitter account, at the one Vortex, all spelled out, no numbers, just at the one Vortex, is where I kind of where my consciousness it really is at any given time. And that is the world's water cooler. That is where all the discussion is happening around Bitcoin and cryptocurrencies by all the prominent people, not anonymous trolls, but the real people, the CEOs, the hedge fund managers, the people that are on the ground, the programmers, the developers. This is where the discussion is happening. So you'll definitely find me on Twitter at the one Vortex, and again, the worldcryptonetwork.com.
Vortex, thank you so much for taking the time.
Absolutely. Thank you so much.
Vortex, the host of the Bitcoin News Show on the World Crypto Network. For Cryptocurrencies, the Future of Digital Money show, I'm Michelle Holliday at PortfolioWealthGlobal.com. This was one of the best interviews of 2017. Portfolio Wealth Global's founder, Tom Beck, is now in a due diligence marathon, looking into the entire blockchain and cryptocurrency sector. As 2017 wraps up, there are incredible opportunities opening up for all of us in 2018. Cryptocurrencies are here to stay. There is no doubt about this. It is only a matter of adapting to them and adopting them at this point. Any denial or postponement is only counterproductive. Cryptocurrencies will not replace precious metals, but instead offer new alternatives to fiat currencies. Nothing is perfect. Precious metals have pros and cons. Fiat currencies have pros and cons, mostly cons at this point, and cryptocurrencies have clear advantages and noticeable disadvantages as well. One thing remains true. When it comes to commodity-based money, there is nothing better than gold and silver. Thousands of years of social and economic experience have proven their superiority in terms of their innate natural characteristics over base metals such as copper, lead, and aluminum, agricultural commodities such as rice, cocoa beans, etc., livestock such as cows, rabbits, and fish, and all other commodities that humans have attempted to use for trade, gemstones, silk, salt, alcohol, barley, tea leaves, etc. Nature created them in a chemical manner that fits the role of money superbly. But now, there is a new player on the scene, mathematically based cryptographic money, and it is gaining acceptance. Coinbase has 13 million users, while the number at Schwab, one of the top 5 traditional brokers in the U.S., stood at 10.6 million at the end of 2016. Of course, Schwab clients have far more equity in their collective accounts than Coinbase users, but the trend is clear. In 2018, what Tom Beck sees are a number of opportunities that have life-changing potential, rags to riches kind of opportunities. Hypersonic growth, the emergence of new cryptocurrencies that will hit the market and reach $1 billion valuations in a matter of a week or a month. Bitcoin, for example, now has a market cap that is larger than those of Philip Morris, Marlboro Cigarettes, McDonald's, American Express, Royal Bank of Canada, PepsiCo, and Disney, just to name a few. A $1 billion market cap is doable in a week or a month, and with so many alternative media outlets covering this sector, you will want to be fast at due diligence before pulling the trigger. Portfolio Wealth Global is now assessing 21 cryptocurrencies a week, while we build a large internal database that covers the entire spectrum. Keep in mind that we are only speaking of cryptocurrency tokens. Since most cryptocurrency positions are in the hundreds of dollars or even a few $1,000s at best, the larger sums that can really work for you will be available in a traditional stock. Be sure to go to portfoliowealthglobal.com to make sure that you are subscribed to our free 365 Global Wealth newsletter. Thanks for joining us today. For Cryptocurrencies, the Future of Digital Money show, I'm Michelle Holliday at portfoliowealthglobal.com.